Hi, everybody. This is Dan Sheridan. It's Tuesday, October 10th, and I'm excited to talk a little bit of zero-day trading with you. And next Monday, so it'll be October 16th, we're going to launch, we're going to do our zero-day class for 4 weeks. And in that zero-day class, we cover two things: zero-day trades, and then we'll cover short-term trades, 4 days or less. So 2-day trade or 4 days. So we encompass the zero-day up to 4-day trades, very short. But the special emphasis on the class starting October 16th is going to be, I think, an area a lot of people are maybe a little weak with: risk management. What do you do when it goes trade goes against you? Focusing on the Greeks, how these Greeks change with zero-day trades, and how I would manage these trades. And a lot of this, picked up managing by the Greeks when I was market maker for many years at Chicago Board Options Exchange in Chicago. And so I think that will be a benefit to you, especially in the roller coaster ride of zero-day options, understanding the Greeks of the trade, how fast your deltas can change, how your gamma changes the deltas, what you can do about it, when you should deal with these trades, when you should adjust, how much should you be willing to lose on an order or make on an order, how does all that work, and to give you help you become a good craftsman with these trades. Anybody can put on a zero-day trade, but the only way you're ever going to increase your size is if you feel comfortable in your risk management. And the myth is, well, you're always going to have big drawdowns. You don't have big drawdowns because there's zero-day options. You have big drawdowns because you don't have a plan, or you don't understand risk management or what you can do. And I think that's a big difference. So that's what we're going to focus on, folks. Here's an example of a zero-day iron condor in SPX. We're about 12 o'clock, a little over 12 o'clock Central on October 10th. And you can see we're on a day where, this is the third up day in a row, big candle coming, I think the news is we've just, since September 14th, we came from 45.05, right? And we hit maybe about a low, not more than two and a half weeks after, of around 42.16. So we almost went down 300 points in two and a half weeks. So this is just coming back. I don't think this is anything to do with anything other than, we were tremendously, I think, oversold, and this was good, healthy. And so when you have an iron condor, I'll spend a lot of time with looking at the Greeks of the trade, with the theta, the vega, but seeing, especially, with the type of gamma, which is very high in these zero-day, what does that mean? And how does it affect how your deltas change if we move 1% or 0.5% in the SPX? And, for this trade, this is a 10 wide iron condor. I'll be covering, different trades, butterflies, calendars, credit spreads. But the key isn't the trade, right? The key is, how do you manage it? How can you manage risk management in such a way and get comfortable with it that you don't mind going a little bit bigger size, right? And that's where we'll focus on, is the Greeks, and looking, this is your graph at the end of the day, here's your graph now. Well, zero-day graphs can be very steep. And when do you adjust it, and how would you adjust it, and in a way that makes sense? So join us next Monday, October 16th, and we will delve into, really focus on the risk management, the Greeks involved with zero-day and up to 4-day trades. And I think that should be a benefit with you, give you more confidence going forward. Maybe you can increase your size a little bit, but give you a little more confidence. Thanks so much. Appreciate it.